Hey everybody, and welcome to your Pro Tip Tuesday. Okay, let's go ahead and get started. So yesterday we talked about income and how important income is in the mortgage process. And today we're going to talk about assets. So let's go ahead and jump right into it. So here is a little slideshow I put together for you with some information about assets. So what are some of the things that you need to know about assets? Well, assets are money that you have access to that are liquid. Common types of liquid assets are checking and savings accounts, investments, and retirement accounts. Other accessible funds are equity from real property. So if you have property that you own already and you're going to buy another piece of property, you can pull equity out of the already owned property to help you buy more real estate. It's one of the 2 times you can actually use borrowed, quote-unquote, borrowed funds to help you get a mortgage. Now, the lender is going to want to know that the payment on that equity line that you pull that cash from is not going to affect your DTI in a negative way. You also can get gifts from close friends or relatives. It has to be gifts. It can't be borrowed money. Okay, they're going to have to sign a gift letter. They're going to have to prove where those funds came from, that they didn't go out and borrow them themselves. But you can use gift funds to help you out if you don't have quite enough resources available. A 401k loan is another option, and I've got an asterisk by those 2 because it does say that those are equity from or are loaned from. But again, with 401k, here we're going to be looking to make sure that that payment back to the 401k is not going to negatively impact your debt to income ratio. But as long as it doesn't, then you can use that money because it's your money. You're basically paying yourself back. You can use that money to help you purchase a home. Seller concessions are another great help. They can't be used for down payment, but they can pay things like closing costs and maybe buy your interest rate down some. Or be applied to discount points, which is the same thing. Selling of personal property with proper documentation. So let's say you've got a pickup truck that you just don't use a whole lot and you could sell it for $10,000. If you document the sale properly, you can use those funds to help you in this transaction as well. So here's a real quick little thing to remember as far as documentation. So you want to make sure you got a bill of sale that's signed by you and the buyer. You want to make sure that they pay you in such a way that we can track that payment. Usually cash is not as good as a check, so I would recommend you get a check or a cashier's check or a wire transfer from them, something like that, something where we can show that chain of money. And then you deposit that money into your account. Don't commingle it with any other deposits. Just deposit that 10 grand into your account by itself, or whatever amount that money is that you get from that. You want to make sure if it's a vehicle that has a title front and back filled out with yours and the buyer's information that's been notarized or documented properly, and you will get a copy of their check. You want the front and back of that, a copy of the sales order or the bill of sale, and you want to get photos of the front and back of the title to show that all that stuff was done properly. But then you can use personal property sales to help you come up with funds for closing. Funds you can't use are what we call mattress money. Okay, so that would be money that you store somewhere outside of the depository bank or savings account, something like that. Any money that can't, just think of it this way, any money that can't be tracked with a good paper trail cannot be used to purchase real estate. Borrowed funds cannot be used. Remember we talked about gift funds. Well, you can't borrow any money. So mom and dad won't loan you money to help you buy a house. That won't work. They have to sign a gift letter with those funds saying it's a gift and not a loan, that you're not responsible for repaying it. You can't take money out of a credit card to help buy real estate. Cash without proper documentation, any kind of cash from any source that's not properly documented, will not be able to be used. Other funds not documented properly. So I don't know what that might be, but I just want to put that out there, that if it's not documented, and I keep reinforcing that word, then you're going to have trouble using that in a real estate transaction. If you have questions about this, please reach out to me. You can put a comment under this video, or you can email me. or you can go to my website and you can find my contact information on there. I'll be glad to answer any and all questions you may have. Again, please like, follow, and share these videos because you never know who might benefit from getting this information. God bless you and have a great day.